This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachardis. Thanks for joining us at XM.com. Global markets continue to dance to the beat of monetary policy signals. The world's reserve currency surrendered some of its latest gains, and equities clawed their way back to record highs this week as the Fed did some damage control, with several officials playing down market concerns around faster rate hikes. The central bank rolled out the big guns yesterday, with Chairman Powell reassuring Congress that rates won't rise prematurely and that he is quite confident this inflation episode will prove transitory. This message was echoed by several influential policymakers like Williams and Daly, who stressed that it's still too soon to dial back any liquidity. Investors deciphered all this as implying the Fed won't rush into anything and will hold the market's hand throughout the normalization process, which helped propel the rate-sensitive Nasdaq to new record highs as tech and growth stocks came back in vogue. Absent some calamity in economic data, a realistic timeline for markets is that the Fed sends the first major signal for tapering bond purchases at the Jackson Hole Symposium in August, before officially announcing in September that the process will begin by year-end. Meanwhile, the European Central Bank is headed in the opposite direction. The latest reports suggest the ECB is considering raising its inflation target when it concludes its strategic review and signaling that it will tolerate an overshoot. Therefore, in September, we might simultaneously get an announcement that the Fed is moving away from cheap money, while the ECB essentially commits to a prolonged period of negative rates. That could cement a period of policy divergence between the world's two largest central banks, spelling downside risks for euro-dollar. The latest PMI surveys out of the euro area have just been released and pointed to an economy that's booming, reflecting the reopening momentum and widespread vaccinations facilitating greater consumer spending and business hiring. Helping matters further, the economic acceleration seems to be broadening, spreading from manufacturing to encompass the battered services sector as well. Naturally, the news lifted the euro in European trading. This is today's Daily Market Comment. Thanks for joining us at XM.com.